Let's begin with the company that was supposed to report this afternoon but moved its release up to this morning. Twitter shares getting a boost after reporting better than expected earnings in the third quarter and announcing it's shutting down short-form video app Vine. It's also laying off 9% of its workforce. Earlier on the conference call, CEO Jack Dorsey addressed those job cuts.
We're getting more disciplined about how we invest in the business. We fully funded our most critical initiatives. We set a goal of driving towards GAAP profitability in 2017 as we deprioritize certain initiatives and simplify how we operate. As part of this, we decided to reduce the size of our organization by 9%, mostly concentrated in sales, partnerships, and marketing.
Joining us now to talk more about Twitter, the stock, is Stephen Dudash from IHT Wealth Management, who's bullish on Twitter, and Youssef Scully from Cantor Fitzgerald, who has a hold rating and says he's cautiously bearish on the stock right now. Stephen, let's start with you, if you don't mind. The stock's really not holding the morning gains very well. There's a lot of talk about being a little more careful about spending, more vague talk about reinvesting in the user experience. What did you see in today's numbers that either reinforces or gives you pause about your bull case?
Okay, so let's be honest here. Twitter does have problems. It would be a lot easier for us to sit here and talk about how great Amazon's killing everything. But we were on the show 3 months ago talking about Twitter too, and no one liked it. And it's up double digits over that same period of time versus the S&P 500. The thing I like about them right now is they're accepting who they are. They're a 300 million user company. They're not going to get to 600 million users. They cut 9% of their staff last year. About this time, they're cutting another 9% now because they're accepting this is our company. Let's try to make it as profitable as possible within this model. And it looks like next year is when their target, they're going to finally be profitable. What they're doing with the NFL, that live feed on it, it's killing it. It was $2 million in the first few weeks, $3 million now, up to $4 million probably soon. NBA, NHL is looking to follow suit on it. So they're taking their existing base and trying to make as much money as possible off that, make them more active users, as opposed to saying, hey, we're going to get another 100 million users, which we all know is not going to happen.
Make them sound like a teenager accepting who they are.
Yeah, I mean, kind of.
Yeah, Youssef, talk a little bit about why you're bearish on the name still.
Well, look, I mean, today's print, I would say, it doesn't make us more bearish or more bullish because it was really kind of in line with the expectations. Maybe on the bottom line they beat a little bit, but on the key metrics of basically user growth, that was really a non-event. So the good news is I think they have the right strategy in trying to build live and build usage around it. The bad story here is Q4 is probably going to be a wash because of this sales reorg that they're going through. We were hoping that Q4 would start seeing some improvement in the monetization and user growth. I don't know now if we're going to see it. So the first period we're probably going to see it, if it ever happens, will be early next year. So, you know, the numbers I think we saw today put a floor on where the stock should trade, but, you know, it really should not be a reason to get anybody to be an incremental buyer.
And Stephen, you mentioned that Twitter now seems to be accepting what it is, but really there's a lot of conflicting signals about exactly that self-conception, right? Is it a platform for just real-time live experiences? Is it kind of a synthesizer of the news that you personally want? Should they charge people to use it? Is it kind of a newsletter platform? All these things are kind of out there, so where do you think the real value is going to come?
Well, that's probably the reason why they weren't able to sell a couple weeks ago when they were trying to find someone to buy it, because what exactly are they? And I'm not going to tell you they figured that out. I know it's nice that they're trying to find a way to make themselves profitable, though, and not just burn through cash and keep pretending like they're going to double in size over and over again. They're probably a little piece of everything you just rattled off, and that's why eventually the X factor here is someone's going to buy them at some point in time when they start making some more money or they hit a price that someone's willing to jump in. I know a lot of people dipped their toes in it for a little while and then backed off. Sooner or later, they are more of a feature than a full-blown company, and they're going to help someone who's looking to compete with, say, Facebook or something along those lines down the road and fold into a bigger entity along those lines.
Youssef, briefly, before we go on that point, then, is it easy to be cautious on the shares when that potential bid is out there? And how long do you give it to materialize?
Well, look, we've always said that this management team has a few quarters now. By the look of it, it looks like a couple of quarters for them to prove that this new strategy is going to work for the stock to really be intrinsically cheap. But, look, we're fundamental analysts. We're not trying to make calls based on the probability of a takeout. Having said that, we actually published a note several weeks back highlighting how Alphabet actually makes the most sense for them to acquire them. And if you look at,
Agreed.
just as an example, sales and marketing for this company is around 30%. You compare it to other players like a Facebook or Amazon or Google, excuse me, it's around 15%. So if somebody like an Alphabet were to acquire them, then they could dramatically improve the value proposition, lower or improve the bottom line, and ultimately be able to pay a higher multiple for it. So we do think ultimately it gets taken out. Yep.
All right. And we'll hear more from Google, of course, after the bell. Stephen, Yusuf, thank you guys for now on Twitter. They're having quite a day after its earnings.